Hey, Kevin Brierton here with your mortgage market report for March 2026. Wanted to give you some relevant information. We got a lot of things going on, war overseas, oil prices spiking, and interest rates really being pretty volatile. But I want to show you what's happening in the housing market right now with relevant information. Spring momentum is coming. We have a lot of movement though in the market, and it's helping move the market, even though rates have been volatile. Some of the snow is dumping across certain areas, but man, that weather is not holding the market back. The January sales slowed, but expected February rebounded really. So we've seen that January slow. But what I saw real time was I did more pre-approvals in January than I had in a long time. So the activity was there, and that's showing up in some of the sales numbers in February and March. Mortgage rates near, right, still hovering right around that 6% range. And that's helping keep that buyer demand moving forward, even in that winter weather in certain areas, not in Arizona, but in certain areas, that's continue to help push the buyers into the market is because of where the interest rates are. And we'll talk more about that in a minute. And there's still a lot of new inventory coming to the market. We usually see a lot of inventory over the years come into the market in January, February, March. It's pretty typical that we see these numbers go up during this time. So if you're out there looking to buy a house and you haven't found the right house, just be patient because we're going to start seeing continual more inventory over the next couple months. So keep looking for the right properties. And then active listings usually go up too. We have more active listings right now, more inventories coming to the market, more active listings than the last couple of years. We saw the big drop in 2022. There just wasn't a lot of houses on the market, and we've been well below a lot of the averages in the previous years for many years. We finally kind of got back to right where 2020 was, but we had a lot more active listings in the previous years before that. So just more inventory, more options, more ability to buy and sell, more ability to get your first home or second home or investment properties. Days on the market shortens, multiple offers are becoming more prevalent. So we have seen a shorter time on market. That's because of where the market is right now with interest rates coming down, and just springtime brings more buyers. People a lot of times wait till they get their taxes filed and things. So we've seen more buyers come to the market, which is helping the multiple offer situation increase. So right now, typically sellers sell faster during spring. So on average, since 2023, we have seen a lower days on market during the springtime, and it increases over the year. So we are still seeing this trending down, but during the winter months, buyers are more eager to get out of the house and, see homes, during the warmer months of the year. So as we come out of winter, though it warms up, people are more eager to get out there and look at properties and start seeing things. During the holidays too, during the wintertime, and it happens to be colder too, people are just preoccupied by other things. Usually during the wintertime and the holiday time is actually a really good time to buy, but a lot of people, they're just preoccupied. So they just decide not to buy, and they are doing other things, which is okay. The economy feels a little uncertain right now, but the data really isn't that scary. I know there's a lot of news out there and a lot of headlines about things being scary out there, but it's really not as bad as people are seeing, because right now a lot of the models are built with an increase of oil costs overall, and how it's going to strain the economy or push things into a recession. Right now, if you remember, we had oil prices like this, or at least gasoline prices like this, and not too recent memory, we had high prices in Arizona. We had $5 a gallon gasoline, and we're getting back to close to that. We're about $4.60, $4.70 right now, and we saw that, and the economy and the inflation was still, moving along even at that price point. Yes, we'll see some prices go up, which is problematic for the interest rates. And we'll talk about what that's doing to interest rates right now, and how that oil price is actually affecting mortgage rates, and how that it's actually helping drive up interest rates. But economists don't foresee recessions necessarily, again, a recession coming, but that's going to be a driving factor, though, for interest rates. And the Federal Reserve, the federal government doesn't see a shutdown coming. So that we did have the shutdown in late 2025, but everything we're looking at and from the economists we're tracking, that was more of a one-off that won't necessarily be repeated in 2026. Fingers crossed. Hopefully that's the case. And the growth ended 2025 weaker than expected. So we did see that weakening. Even as they lowered interest rates, we saw a weakening economy, which actually kind of helped in some ways because it helped keep the interest rates down because people thought maybe we're kind of easing on the inflation, which actually kept mortgage rates down overall. We already talked about government shutdown. We should see the economy bounce back in 2026 because we did have that government shutdown at the end of 2025 as far as the government shutdown. But inflation stabilized. So we have seen the inflation almost get to 2%. This is the target range for the Federal Reserve to hopefully lower rates more. As of yesterday, the 18th of March, they did not lower the Fed funds rate. So, but they also didn't raise it. So that it's kind of a neutral. We need to see this number come down a little bit. So we got to see this inflation tick down. We've had some not so great news with oil going up, like I mentioned, but inflation is kind of stabilizing, but inched up just a little bit. So that's why they're not necessarily lowering interest rates. As we were coming into, the end of 2025, we actually saw inflation coming down and we saw it come up a little bit recently. Mortgage rates kind of hit that 3.5-year low point, but recently, due to the sell-off in mortgage-backed securities, this is the mortgage-backed security market. The actual mortgage-backed securities work inversely related. So if you go up, it's good for rates, and down is bad for rates. And we bought a bunch of lock alerts. We ended up locking most of our loans right in this range here, protect our clients from the downside. But we've hit 200-day moving averages right here for 10-year treasury, and it wasn't so good because we haven't been in this range for mortgage-backed security market going all the way back till September 2025. This is bad for interest rates here, this range. So if we go all the way back, I mean, we really haven't been in this range here for a little while. And so hopefully we'll hold here. This is another kind of floor of resistance. So if we break through that, that could be a problem, but we're kind of bouncing off it right now. This has been where we're holding at. And as far as average interest rates, this takes average interest rates from about 35% of all locked loans on average. So it's kind of nice to look at. If you look at different product types, interest rates can vary a lot, but overall we've seen rates, kind of tick down and then all of them kind of tick up a little bit over the last couple of days. If we go all the way back, I mean, we haven't seen, I won't go that far back, but if we go back into we haven't seen, really rates aren't that bad. If we look at it, like I'm looking at this here, let me take away some of these. Let's do 15-year USDA. Let's leave conforming loans, jumbo and FHA and VA. Let's just assume a good credit score. See, all of them are all a little bit different. So it's good to kind of look at the averages. But if we haven't seen, we saw a lot higher rates. Like in summertime, we were hitting over 7% on a lot of these. And then now we're, still pretty low compared to it on the averages, depending on where it sits at. So even though we've had a little bit of a tick up, we're pretty far from the tops in the summer of 2025, which is really good. And as we see that inflation coming down, if this kind of comes down, we actually will see lower rates. But right now with oil prices up, we're most likely not going to see lower interest rates for the time being. But the nice thing is unemployment's still holding steady. We haven't seen a big fall off on unemployment. So people are still staying higher on the jobs. The job market is a little softer than it was, but it's nothing like it had been in the past and different times. So it's really helpful. But we have seen contract cancellations on a rise. And I'm going to give you a couple tips on how to avoid them. I'll talk a little bit about the buyer side and the listing side and comparing both of them, because the cancellations are up and they have happened for a number of reasons. Right now, it's more of a buyer's market. Different markets are a little bit different, and I understand that. But in general, it's more of a buyer's market in most places, either balanced or buyer's market. And that basically gives the buyer a little bit more clout in the negotiation, and then they know that. So sometimes they'll push the limit, and the seller says, you know what, we're done. The seller might not agree to what their buyer's asking for. The buyer might not agree to what the seller's asking for. But I think somewhere in the middle is really the right thing. Cancellations are up, but how do we avoid some of this? Because when we saw like when rates were really low, you have low cancellations because buyers are like, fine, I want the rate. I don't care if the house is bad, XYZ reason, problems with it. I just want to buy the house. That's not necessarily a good thing, because if they're buying a house because of some unknown reason, that's not great. We've also seen a lot of houses where people are selling and buying. We just had a client house fell out because their buyer fell out when they were buying their house. It was a contingent offer and their deal fell out. There's some buy before you sell programs, bridge programs. So if you're selling your house, a good tip to avoid some cancellations is try to get them to agree to a buy before you sell bridge program. So even if their house falls out, they still have to buy your house and you win. So I just want to make sure that is a reason we're seeing cancellations and buyers pulling out if their house does not close for different reasons. So if you're entertaining a contingent offer, make sure it benefits you as a seller to take that offer over other offers. And we've seen things like negotiating for hard earnest money. So non-refundable earnest money. If you're selling your house, I would tell you start negotiating that, especially if it's contingent. Hey, I want a non-refundable earnest money after XYZ. They say 15 days in the contract or whatever that is. That's a really good strategy to get some of that money in your pocket if they decide to cancel. Highest cancellation rates across the country, kind of the hot markets, that we've seen a lot kind of do really well over the years, but also have more movement in the market and cancellations. So these are the areas we're seeing that. Housing costs and rising inventory have made buyers more selective. So just like I was saying, if they don't like something in the house, they're backing out maybe during inspection or whatever. So they're a little more selective, a little more inventory. Interest rates aren't really low. So they're not just saying, fine, I'll buy the house. They're walking away. So try to make it, if you're selling your house, let's try to work together, work with the lender, do things like escrow holdbacks, or we're doing an escrow holdback for a client for a roof. That's an option too. If there's things that need to be fixed, the seller may not be able to afford it out of their pocket, but it needs to be done. You can talk to the lender and see if they'll do escrow holdbacks to hold back the money to get things fixed. A lot of lenders will have a problem with doing escrow holdbacks or showing repairs need to be done. But if you do it through the right channels, it should be possible with the lender. Just talk to your lender about that. And then tips for sellers: monitor the market and act quickly. I do, talking to a lot of the agents we talk to, it's really important to price your house right. If you don't price within about 5% of what you think it's actually going to sell for, it's really going to be hard to sell the house, especially in this market. So very important, price it right. We've actually seen really smart sellers and sellers agents price it strategically low to drive up the price. I have a client right now that had to pay about $25,000 over list price to get the house. Well, it's not necessarily that the house they overpaid for the house. It's just the seller listed it low, drove more traffic to the property, and actually went above list price. And so it's a really good strategy. So don't overprice your house, especially in this market. If you overprice it, I just heard, if I price it high, then I can always come down. Well, yeah, you can always come down, but that means you're going to go stale on the property listing, and it might be 30 days in or 60 days in, and now you're dropping the price, and that doesn't look good. If you start at aggressive price and you go up, you can go up in price, because if you have multiple offers, you can go up in price, or you might not have to give as much seller credit or other things that you're going to have to give concessions at a higher price. They're going to expect more from you as a seller. So keep that in mind. So that's on number one. And number two, be ready to negotiate. So be ready to make the deal work for the seller, whether it's a big seller buy down. You can do rate buy downs for buyers. Temporary seller buy downs are great. You can help out with the interest rate and buying it down. You can do a new roof. Like I was saying, for one of our clients, we're getting a new roof where we bought out. One of the things, if one of our buyers really was payment sensitive, and We actually bought out mortgage insurance for the client. So that's another strategy. You can buy out and negotiate and provide value to the buyer that if you can just talk with the agent, talk with the lender, just work together and get the deal done. That's why we are not just AI agents. We are real people working with real people, putting deals together. So that's a big deal. Number two, be ready to negotiate. Buyers frequently back out of deals during inspection contingencies. They use the inspection contingency to cancel that contract. This is coming from Redfin. Inspections are something that as a home buyer, you need to understand the inspector's job is to tell you everything that's wrong with the house. Your job and the agent's job is to come through and go, what is really a problem? The inspectors is literally going to list 70, 80 things that are wrong with the house. That's their job. Don't let that spook you and make you run away. Use that to negotiate with the seller to get things fixed or get credits for things to be fixed. The most common reasons people fall out are foundational repairs or actual damaged roof issues or really old roofing. Plumbing is a big one we see. So these top three are what we see live real time. Old electrical systems. Be a little careful here if you have older electrical system that's just older, but nothing's really wrong with it. Really dig in and really understand what you're getting into. Sometimes it's bad. Sometimes it's okay. If your house price, anything on the list here, it could be issues, and they could be big issues. But you want to make sure you understand what it is, and is it something that's already priced into the house? So, for example, let's say you're buying a house and it has, some minor issues that are not health and safety issues, or even if there are health safety issues. If the price is low enough and you're getting enough value in it, then that could be a reason to buy it. So if the house, let's say, is $600,000 house in the market, but you're buying it for $400,000 and it has some issues with it, great. So there's got to be some reason that, hey, if it's going to cost me $20,000 to do a roof, but I got it significantly undervalued, maybe that's beneficial. Something that you can use for this is a renovation loan. So there's different renovation loans, both for a VA even has a renovation loan that we do. Conventional has a renovation. Jumbo, we have some jumbo options to do renovation. There are some ways to do these fixes after closing. The money's held in an escrow account and then paid out to the contractor after closing. So the house technically doesn't even have to be move-in ready for a loan with a renovation loan. So it's just something to be aware of, that it is possible, but these are big ticket items that do cause things to be, home inspections to fail. As if you're a seller watching this, what you can do is you can do a pre-certified home, just like a pre-certified car. You can actually go out, get an inspection. I have a great inspector that will do this for you. I can do pre-inspections with our home inspector we work with. And then also we have an audio video guy that does a great job. So he'll come out, they'll come out and they'll do a pre-inspection for audio video. And this is a big deal with like smart TVs and smart homes and, speakers everywhere and different things, locks and all that. Doing an audio video pre-inspection and giving a report when you list the house with the pre-inspection report. Think of pre-sold or pre-sold or pre-owned car and a car report, Carfax report. If you can do a pre-certified home inspection and show it's been fixed, this could be a really good way to get your home to stand out and overcome those inspection cancellations. So my name is Kevin Brierton, certified mortgage planning specialist here with Kevin Brierton team at Luminate Bank. Please like, share, and comment. Thanks again for watching. If you have any questions, comment below. Otherwise, we'll see you on the next mortgage market report next month in April.